We want out. Michael Saylor and Gary Gensler react to latest crypto crash. The crypto market has been through the mayhem in recent weeks, following the collapse of the crypto exchange FTX. FTX, which was owned by Sam Bankman-Fried, saw its market value collapse from $32 billion to $0 in a matter of days. Consequently, crypto investors' confidence was shaken, and a sharp sell-off wreaked havoc on cryptocurrencies. Investors and policymakers quickly commented on the dramatic events, including Michael Saylor and the Security and Exchange Commission's chair, Gary Gensler. Michael Saylor is the CEO of MicroStrategy, a firm that invests heavily in cryptocurrency. In response to the crash, he said, "We want out," indicating that he doesn't want Bitcoin to be put in the same bowl as other crypto assets and companies. Meanwhile, Gary Gensler, Biden's pick for SEC chairman, responded in a calmer manner. He stated that the crypto crash showed the importance of strong investor protection and proper oversight, highlighting the need for government regulation in order to ensure consumer safety. However, Gensler has been cornered for his support of the collapsed FTX. The new CEO of FTX, John J. Ray III, a veteran lawyer appointed to guide the company through its bankruptcy, said the failure was unprecedented and a complete failure of corporate controls. He said in a bankruptcy filing that never in his career had he seen such a complete failure of corporate controls and such a complete absence of trustworthy financial information as occurred in FTX. From compromised systems integrity and faulty regulatory oversight abroad to the concentration of control in the hands of a tiny group of inexperienced, unsophisticated, and potentially compromised individuals, adding that this situation is unprecedented. The comments are likely to add further pressure on Gensler's failure to anticipate the dramatic crisis. One Washington insider told Fortune.com that Congress wants to quiz Gensler over how the SEC failed to spot a massive fraud that took place right under its nose.
I think this week highlights the virtues of Bitcoin as much as it exposes the fragility of the crypto ecosystem. Bitcoin's a commodity you can self-custody without an issuer. The vast majority of all the crypto tokens out there are unregistered securities trading on unregulated exchanges, and they're fairly centralized. And so what could go wrong? Well, we saw what could go wrong if a centralized token trading on an unregistered exchange blows up this week. I think that the Bitcoiners have been predicting this for a long time. Speaking for all the Bitcoiners, we feel like we're trapped in a dysfunctional relationship with crypto, and we want out.
Welcome to Interweb Coins, where we cover crypto, the economy, and the people that influence it. We are here to lift the clouds, pull back the curtain, and give you a leg up in the world of crypto. Today, we'll be going over the FTX collapse, its impact on crypto markets, and the mind-blowing comments from Michael Saylor and the SEC's Gary Gensler amid the dramatic crypto events. Gary Gensler said that he taught a course on Bitcoin and blockchain technology at the Massachusetts Institute of Technology, or MIT. The purpose of the course was to explore the potential of blockchain technology while looking at both commercial and public policy considerations. The SEC's chairman said that this has allowed him to know that the technology has massive potential in terms of innovation. However, he argued that the sector needs more regulation and that investors need more protection. Gensler also argued and talked about the fact that FTX and other major crypto firms rely on celebrities for promotion, like in the case of FTX, which had Shark Tank's Kevin O'Leary, Shaquille O'Neal, Tom Brady, David Ortiz, and Stephen Curry, to name a few. This has allowed FTX to mislead investors, luring them into believing that their platform is trustworthy. I mean, we should trust a company with Kevin O'Leary as its ambassador, right? However, this has taught us an expensive lesson about who to trust in markets.
When you mix together a bunch of customer money, non-disclosure, and leverage, borrowing against it, and inside, these companies trading, investors get hurt. And I think just looking at what we see in the press, if I can stay with that, just Andrew, this story has been going on for many months. You remember the collapse of Terra Luna and a bunch of crypto lending platforms. Well, it looks like in the last few days, this is all interconnected. This is a very interconnected world in crypto with a few concentrated players at the middle. And one of those concentrated players had the toxic combinations of lack of disclosure, customer money, a lot of leverage, meaning borrowing, and then trying to invest with that. And then when markets turned on them, it appears that a lot of customers lost money, and that's where our mission is about those customers. I think that investors need better protection in this space, but I would say this is a field that's significantly non-compliant, but it's got regulation, and those regulations are often very clear, and we have multiple paths. And one path is working with those crypto exchanges, crypto lending platforms, and to get them properly registered. And why that matters is that's so the public's protected. But we have another path, which is enforcement. We've brought, between my predecessor and the teams now at the SEC, at least 100 actions in this case. And we've been very clear in these various enforcement actions. And we had a big win even this week on a crypto token called Library, where a court clearly said, you've been on fair notice, and yes, this is a securities under the securities law. Look, the runway is running out. I mean, the American public and investors around the globe are getting hurt by a field that says they put a lot of fancy talk around it, Andrew, and the technology is interesting. And I taught it at MIT, and I think that there is some innovations here, but we still need investor protection. And so what I would say is come in and talk to us. You've heard that before. The runway is getting shorter, and the laws are clear, and it's pretty rich for me when I think about it. Look, there's also celebrities. You talked about celebrities. There's celebrity CEOs in this space as well, celebrity crypto entrepreneurs. And so the public can fall prey to their promotions, their marketing, and the like. And it's really important. Our third path is also investor education. Going on a show like this is also to say to the public, beware, this is highly speculative. It is regulated, but without prejudging any one circumstance, largely non-compliant.
Nonetheless, this is not the only thing that caused the crypto crash. In fact, a plethora of other factors were in play, such as the hawkishness of the Federal Reserve, soaring energy and food prices, and persisting inflation, which reached a 40-year high. The impact reverberated through equities markets, and even tech giants were forced to adapt their strategies to save their firms. For instance, Amazon laid off 11,000 employees, while Twitter cut out 4,000 jobs, which represent 50% of Twitter's workforce, and only 1% of Amazon's headcount. The layoffs, in addition to plunging housing prices, may suggest that the Fed could ditch its rate hike agenda. Michael Saylor, the CEO of MicroStrategy, which is a tech firm that has successfully adopted Bitcoin as its primary treasury asset, said that he expects this to be the beginning of a massive wave of inflation and economic uncertainty. He also added that if we don't fight back against it with hard assets like gold and Bitcoin, then our economy and currencies will suffer. Saylor added that Bitcoin must be understood as something outside this crypto industry, as something that will become part of the traditional financial system, and that this process is already happening. He believes that it is only a matter of time before Bitcoin becomes mainstream and accepted as a viable form of value storage.
Speaking for all the Bitcoiners, we feel like we're trapped in a dysfunctional relationship with crypto, and we want out.
MicroStrategy CEO and infamous Bitcoin bull Michael Saylor reacts to the collapse in the crypto markets and says enough is enough. With the second largest crypto exchange going under this week amongst a slew of hacks and shady practices, Saylor speaks on how this only highlights the difference between Bitcoin and its value proposition and the rest of the crypto space. Saylor also warns investors that much of the crypto tokens outside of Bitcoin are in fact securities and need heavy regulation, and yes, this includes Ethereum. Make sure to stick around to the end of the video where we will hear from SEC Chairman Gary Gensler, the man responsible for bringing regulation to the crypto space, speak on the collapse of crypto markets and the FTX situation and how he plans on regulating into the future. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and can always change your mind.
Look, I think the industry needs to grow up, and the regulators are coming into this space. And what the world wants is it wants digital assets and digital commodities and digital securities, but there's no way to register a digital security. There's no clear guideline or roadmap for designating a digital commodity. The world wants $1 trillion of digital currency in the form of the USD stable coin. And so I think that the regulatory intervention of late has been all negative, like enforcement, but the marketplace is waiting for the regulators to say, this is how you register a digital currency, this is how you register a digital security or a digital commodity. And instead of saying all the crypto exchanges should register, we need to get the crypto exchanges registered, because the future of the industry is registered digital assets trading on regulated exchanges where everyone has the investor protections they need, and the investors in general understand the difference between Bitcoin and a stable coin and a security token. There's a regressive regulation, which is to say you can't really do anything, and that'll contract the industry. Bitcoin will be the winner because Bitcoin is a digital commodity and it's the least controversial of everything.
Despite the ominous outlook presented by Saylor, crypto firms are still striking massive deals, and the latest was Portuguese soccer star Cristiano Ronaldo, who partnered with Binance Commercial. Binance has also gone on to demonstrate that it is nothing close to FTX. The crypto exchange published its cold wallet addresses to show that it has enough capital on hand to withstand a bank run. The wallets hold $65 billion worth of assets combined, including 21.3 billion BUSD and 6 billion worth of BNB, Binance's smart chain network token. The two tokens account for 42% of its known reserve assets. This takes us to this month's crypto chart about Bitcoin halving.
Now, one of the major conversations that people are having right now is with regards to Bitcoin halving, the next time that we will see a halving of Bitcoin, and what this means for the asset as we continue to move into the future. I want to start out here because CoinDesk put out a very sort of relevant article with regards to this. And all we have to do is take a look at what this means, right? So the last Bitcoin halving took place on May 11th of 2020. The next one is very widely projected to take place in 2024, which does mean that for the next maybe 18 months or so, we very well could not see a ton of action. There is a chance that, we could see some movement back into the right direction, but after the halving is when we're actually going to start seeing some amazing movement. Now, once again, in May of 2020, the price of Bitcoin entering circulation every 10 minutes, known as block rewards, dropped by half from 12.5 to 6.25. This happens every 210,000 blocks every 4 years, and it only happened twice before 2020. Now, again, the allure of possible riches is what draws so much attention, because realistically what is happening is there is a scarcity problem that is once again happening. The number of new Bitcoin entering circulation shrinks, but demand in theory should stay the same, driving up the possibility of the price. Now, once again, we can see that it happens roughly every 4 years. The last time it happened was a couple of times it happened were relatively recently, but we are still starting to see this movement downwards to where, at some point Bitcoin is not going to have nearly as many moving into the system.
We hope this provides you a bit more insight into the current state of the crypto space. It is important to see what the industry experts have to say, and should be a pivotal part of your research. We want to remind you to continue to do your own research and not take this as financial advice. We hope that we have provided you with some value today. If you feel compelled to reciprocate, please like or subscribe, as this helps us positively impact more people like you. If you have yet to get on an exchange or are interested in finding out where we buy our crypto, please check the video description below. Using our top exchange section to sign up for an exchange can also support the channel. We hope you tune in for future videos.